What I wish I knew before joining prop firms. So I've been trading prop firms for about 2.5, almost 3 years. And here's some of the things that I learned. And quite frankly, I think a lot of you guys would kind of agree with me or, kind of dealt with the same things. And most traders pass by pure luck. I mean, let's be honest. You pass the evaluation or you spend a lot of time taking multiple evaluations. You're so fixated on getting to that threshold, you finally pass and then you lose everything. And then you restart the process all over again, and instead of kind of sticking to what got you there, the particular model, the particular risk to reward ratio, everything kind of goes out the door. And because you failed a funded account after spending so much time getting into the funded account from the evaluation, you start looking at new strategies, you start looking at new take profits, you start looking at new stop losses, you start looking at new sessions to trade, new assets to trade. And one thing that really became really clear to me was that I needed to really get down to the basics, and I needed to figure out the evaluation stage. Am I taking it serious or am I just trying to pass? A lot of times we start off telling ourselves, well, I'm going to trade this evaluation the same way that I would trade real capital. But just like trading a paper account or a 100% demo account or some type of practice account, there's really no emotional attachment to that account. So even though you're telling yourself on the exterior that you're going to take it serious and take good trades, the moment you lose a trade, the moment you go into drawdown, the moment you're on the verge of having a red day, it all goes out the window because of this one thing. Because you know that it's just an evaluation. You know you can go spend another 20, 25, 30, 35 bucks, go buy another one, and you'll be right back in the same place. So you kind of get into this F it, screw it mentality. Okay. And when that starts to happen, you then put yourself in a hamster wheel and continue to spin around and around and around. So there's two ways that I would suggest that you go about it. And this is kind of what I did. I started to look at evaluations in terms of the time that I'm getting back for the risk I'm putting up. And what I mean by that is, let's say, for example, I go with a firm, like, for example, Apex is 80% off right now using code DAnthony. You're going to be able to get a $50,000 account for, let's say, $33. For $33, how much time is that worth? For me, I'm willing to lose $33 a day. Okay. So I'm willing to blow that account essentially or lose $33 a day. If I can pass it in a day, great. If I finish green, but let's say I'm only at $500, that's fine. If I run into some trouble spots and I get in over my head and I blow that account, it's okay. I've only lost $33. Now, I don't know how many of you guys have actually traded a personal account, but I come from trading equities and options. And I know for myself in a personal account, risking $33 a day realistically is nothing. One options contract is worth more than $33. I could potentially lose 50% of my options premium on, let's say, a Tesla contract that costs $300, and that might be $100 to $150, $175 loss. When you break that down in terms of what it really means, $33. Okay, $33. Essentially, you could lose 3, 4 accounts for trading the same cost as one Tesla options contract. Now, that's the benefit of trading prop firms, is that you get a lot more bang for your buck. You're able to allow this to stretch a little bit more. And I think the problem that I used to have was that I was so concentrated and fixated on, I don't want to lose this evaluation because if I do, it's going to ruin my chances of getting funded. When realistically, I switched my mentality to, okay, for every account that I buy, it's basically like taking one trade in my personal account. And that's how much I'm willing to risk per day. That's how much I'm willing to risk per week. So it tends to take a little bit of a load off of your shoulders to where now you trade a little bit more loose. Do you ever notice how when you trade a demo account or when you trade a paper trading account, you tend to not really care about the losses that much, and you tend to make a lot more money than you do in your evaluation or your funded account? And that's because you don't have that subconscious, subliminal attachment to the money and attachment to that account. So that's one way of doing it. Look at it in terms of I'm risking this one account and it's essentially one trade. Now, I'm not saying to go out there and put on max size and take a win or a loss and blow the account or pass the account in one trade, but look at it in terms of that when it comes to risk. The other way to do it is to trade it one-to-one as if you were trading a funded account. And the problem is, and this is what prop firms kind of prey on, is that they know that the trader, the average retail trader, is going to trade too much size in an evaluation. And by the time that they get to their funded account, they're trying to tell themselves, I'm not going to trade, those 2 or 3 mini contracts. I'm not going to take that many trades in my funded account. Things will be different when I get to my funded account. And quite frankly, it just doesn't work out that way, because a lot of times you might do really well in a funded account 2 or 3 days, kind of managing your risk and playing small size. And it's the moment you kind of take that first loss, your brain reverts back to, I remember when I was in my evaluation, if I just put on a little bit more size and I catch that one trade, I'm going to make it all back and some. So everything's going to be perfect. So when you really get down to the basics and you really get down to the nitty-gritty of it all, you have to determine, do you want to treat each account as your max daily loss and kind of speed through these things? Or do you want to trade it one-to-one as if you're going to trade a real funded account? And I would definitely recommend trading micros to start until you build a cushion. That's what I did, trading 2 or 3 micros, kind of building up that $500 cushion, building up that $1,000 cushion, and then kind of slowly adding in one more contract at a time. And if I took a loss that was a little bit bigger because I was trading more size, I immediately revert back to trading those 2 or 3 micro contracts. And I just take more time in the evaluation stage altogether. Take 2 weeks, take 3 weeks, take 4 weeks, take 5 weeks to get these things passed. Because then that's going to build a nice foundation for you to go into trading your funded accounts. So when you pass, it's not like you just got there by luck and get into that funded account and blow and lose everything. Okay, so that's one thing that kind of helped me out. Hopefully this helps you guys out. If it did, make sure, if you do want to implement something like this or kind of change that mindset, give me a thumbs up on this video. If you guys would like to join Evolution Traders and maybe work on this a little bit more in depth, one-on-one or with the community, and get access to my courses with the strategies and get access to being able to trade with a team, because I think that's highly important as well. That link is down in the description box below. If you guys need evaluations, Apex is 80% off right now. You guys can use code DANTHONY. It's at the top of the screen for the spelling. I will see all of you guys in the next video.